When are taxes due on the sale of inherited real estate in North Carolina, and who pays them? The answer depends on which tax you mean. Property taxes are usually handled at closing. The seller's share is charged to the estate or the heirs on the closing statement, and the buyer receives credit or takes responsibility for the rest, depending on how the closing is structured. North Carolina property taxes are tied to January 1st, are usually billed later in the year, and generally become delinquent after January 5th of the next year. Transfer taxes, often called revenue stamps, are also paid at closing, usually by the seller, at $1 for every $500 of the sale price. Capital gains tax is different. It is not usually paid at closing. It is reported on the income tax return for the year the property is sold. If the estate sells the property, the estate reports the sale and may pay the tax, or pass the gain through to the beneficiaries. If the heirs receive the property first and then sell it, the heirs report and pay any tax. In many inherited property sales, the taxable gain may be reduced because the tax basis is usually stepped up to the property's fair market value on the date of death. So the key point is this: closing costs and property taxes are handled at closing, but income tax on any gain is handled later on the proper tax return.